TGIF Warriors, how's everyone doing? You know, it all boils down to this. You got to know when to hold 'em, know when to fold 'em, know when to walk away, know when to run. You never count your pips when you're sitting at the table. There'll be time enough for counting when the market's closed. Hey,
Nice, Dale. Nice.
there'll be time. So I thought I'd start with this. Is pretty interesting. Start the day off with the yen. This confluence that we have here with the 200-day, and this is also the throwover that gave me major heartburn this week. So let's see if we can take it out. Here's
Yeah,
a
me and
better
you and
look at it.
both.
Yeah.
Me, you both. Actually, we just sent out an update on ForexAnalytix about an hour ago with that chart. That's exactly
Okay.
right.
You got this throw over here. So, you know, a lot of confluence. For the week, I think it's still a positive week. I always look at weeklies on either Friday or the weekends. I think that's a good habit to get into. Yeah, I mean, you know, did nothing wrong yet, but you know, if you look at it this way, it hasn't blown out the form. It's not closing over 52. It's traded um, over it by 100, but we're back underneath it. So, you know, maybe 52 is an important close. What do you think, Blake? You know, kind of a pivot there.
Yeah.
Yeah. Okay. I
And
don't
but
think
you
much.
know,
Go
as
ahead.
K-Man will tell you, there's election risk over the weekend. That's the big risk with the yen.
Okay. Yeah.
Yeah.
Okay. So, um, yeah, you have to take that into consideration. I mean, just like the yen, the dollar, even though it came off a little bit, still had a good week. You know, my bias or preferred scenarios that we still got some type of pullback here to 102, 102 and a half. But, you know, I'm starting to think that if this is it, and then we're just into a pullback mode here, if we have a quality, that's going to take you to 106 and a half, which is going to be a, you know, breakout on a lot of dollar charts. And if you get a fib extension of this, you know, that's how you could see 109 if you have 106, 1.618 of this from here. So, you know, the whole ball game, I think, has changed in the dollar in a month. And want to get to K. K, kind of feeling that way that we've entered at least a cyclical bull that maybe could last till the end of the year.
Uh, good morning, Dale.
Good morning. Good morning.
Your volume is going down again. Can
Oh,
you get that? Yeah. Oh,
it's afraid. It's afraid I'll break out into song again. So anyway, what do you think? This
Technical for yeah, as Blake already mentioned. I mean, on the yen side, it's all going to be about the elections, and
yeah,
the biggest swing or the wilder move risk is if Ishiba and new Ishiba's LDP and New Komeito would fall short of a majority. Yeah, they need 233 seats minimum, but a little more to be on the to be on the safe side. So that'll decide upon the moves come Monday in the yen, and being an extremely a much closer call than past elections, there is your risk for the yen. The market has traded the risk, so any more comfortable majority, I would say, is going to be taken as positive, and at least temporarily people who bet on a potential loss or falling short of a decent majority will probably have to revisit their positions a bit. So There's your both sides risk, and I would say losing the majority will probably mean a bigger swing than keeping the majority, because then we're back in what we were doing with Kishida basically in the start of Ishiba's premiership, and then with the Bank of Japan coming up next week, who now 95% sure will keep rates on hold unless FX forces them to move. That should be the quieter picture. I think also what we have to add straight away is those warnings that we had by Kato, Mimura, and a few others about speculation in the end. So imagine that we would have a worse outcome than expected for the LDP. I think intervention risk is something that we need to put on top of our risk list as well. Imagine that we close around 152 tonight, where we are, and on Monday morning the market goes bonkers if they don't get a clear majority, and we trade 155, 156 in one go. I think interventions will be right there. That is my opinion anyway.
Okay.
For the rest, globally, the dollar, I think we're, as I said already yesterday, right? And also spoke about it in the room and on the Flow show. We are in a bit of a managing the books, consolidation, don't want to get too deep into positions for the Trump version 2 trade. And that is now keeping the dollar a bit in check. That's what I think. And can we do another leg? Obviously we can. I mean, it's going to depend on polls and so. And then with the other thing is on the euro, for instance, with 2 days in a row, we had like small green shoots in Germany, and that's helping the euro to recover a bit as well, in addition to what's going on in the dollar. But they're green shoots. They are not big green trees, you know. They are still just some green shoots.
Well, I mean, I'm already lowering my estimates. I thought I was going to be able to short it on a counter trend move at 1050. Now I'm
What
thinking more
1050?
like, yeah, now I'm thinking the best it could do is maybe 9.5 to 10. I think the persistence of this decline is giving me a
Yeah.
message that there's, that was just the first, what do they call that?
First Trump leg.
Well, no, just, first shot across the bow,
Mm.
that there's something going on with the dollar here.
Yeah.
That is more than just this was a grinding wave to short and the dollar's going to fall apart. I think it's,
Too early
telling
to
us that,
call.
yeah, ready to roll after a pullback. I wouldn't chase it here,
Mm.
but I think, yeah, 106, 109 in
Yeah.
the Dixie. So that's a big move from
I mean
102.
that if we get a Trump victory, that is at least what everybody is expecting. That we had a big leg higher in the dollar. I think we can talk a bit more in length about my personal view going into the election, but
You mean if
uh,
Trump wins, we get a dollar rally? Is
oh
that
yeah,
what you're
we get a
okay?
dollar that's going to be one big wave. You get a dollar rally. The Russell is probably and a couple of other things are probably absolutely going to rocket. And then what?
Yeah,
Um,
right,
and the
right.
what could take a while, but I am still in the I'm thinking like once that happens, then what? Because I think there's huge risk in protectionism and stuff like that. And
Yeah, yeah.
Europe
I
is
mean, I'm
a
hearing more of that now. When I first started
yeah.
talking, what? Yeah,
Europe
yeah,
is
yeah. What?
Europe is a tame mutton, but if you kick it too hard, it can all of a sudden become like a hippo on the water, which moves a lot faster than you think and hurts. So I don't know about second round effects. I'm not thinking that's the positivity in dollar could will last very long. But that's just my personal view right now. So yes, that's about what's happening. Sterling is still
Okay.
behaving pretty well. We're closing in on 130, although Starmer and Reeves have not been sending, in my opinion, too positive messages around the budget. Anyone who is not a worker is going to be taxed, and the bar for worker is pretty low, I should say. Yeah. As soon as you start to rent out a property, you're going to be taxed. So that's something which I fail to see why people are buying sterling on the back of it. So that's about it.
Okay, any comment on the commodity currencies?
Yeah, that is part of, I think, the way why they have been kind of lagging now is also the reason, I think, to be found in managing the books on the Trump 2 trade. So you just manage your books. We see the same thing happening in gold, silver, the commodities. It's I think it's all part of that. So they are a bit lagging, but I think they. I'm not going to say they're both at the bottom. We don't know, but I'm a little more positive towards both. Once that book managing, that consolidation is done.
And yields?
Yes, well, I said it yesterday. I think we are going to range until we know whether we get Kamala or his Royal Orangeness version 2. So I think we're going to range for now.
Okay. All right. Blake, how you looking at today? Coming into today.
Well, good morning. Well, first of all, I'm gonna kind of echo what K-Man said about election and about our his opinion there on the dollar. And I want to say this because we had a conversation yesterday. You guys know, if you're a ForexAnalytix subscriber, we have we have our private shows that we do. One of the most popular ones is the Morning Edge, which comes in just after we're done here, about 45 minutes after we're finished here. But we also talk during the daily roundup. Daily roundup is a lot of what's happened from today, from now, throughout the course of the day, kind of wrapping up how things went, what we're looking for into Asia. And then we have a lot of conversations about politics. Well, in this case, yesterday we had a lot of comments about the political environment and where we sit. And this is a good graph from Real Clear Politics. I think this is something that, if you guys aren't referencing, you should be. This, you could obviously see that this was the assassination attempt when Trump was hit in the ear, right? And then you can see where the polling is now, and it's an average of a lot of these betting odds and everything else. It's called Real Clear Politics. If you guys aren't following it, you should. This isn't the end all be all, and obviously things can change when when election night comes. Obviously things get very heated and they start flopping around. So don't use this as your Bible, but as as a trader, you have to be a little bit, well, you have to think not by your heart, but as a trader, you got to be thinking about what ifs. What if this happens? What if that happens? And so I want you to be thinking this is what the market is looking at, something to this, some derivative of this, thinking, okay, wait a second, we are, possibly on the cusp of a Trump 2.0 presidency. What does that mean for the markets? It doesn't matter how you feel. I mean, it does to you, but it doesn't to anybody else, nor to your pocketbook, nor to the market. So you have to, I have my opinions. We all have our opinions of what we think will happen or what we want to happen. But this is the market, and we have to trade it in, not by our heart, by the facts and what polls are saying and the market, how the market's reacting. So I want you guys just to try to clear yourself of your emotions when you're dealing with an election. And that's specifically what we have to do over the course of the next, next week and a half. So just, I want that being said. Now, going into what K-Man was saying about the dollar, I agree. I think the dollar initially, like if Trump wins, the instant reaction is going to be dollar strength, probably across the board. You're going to see that euro slump. We're obviously trading around the 108 level. We're probably going to be trading 106, 105. I don't know, somewhere in that neighborhood, well below 107. But the second round effects, as K-Man pointed out, I agree with. I don't know how bullish it's going to be in the dollar, weeks after the election, because there's going to be, like, obviously the effect of contesting the results, and recounting this county and this and this, and I'm sure, unless it's a blowout, and then you have to consider what Congress is looking like also. So there's a lot of different factors, but I agree with what K-Man said. When you talk about tariffs and protectionism, that division is not necessarily all good for the dollar. And anyway, I just want you guys to be thinking, try not to get too embedded into your ideas on what you think is going to happen, but really you're going to have to just watch price really carefully. And good news is we'll be here to guide you in the weeks following the election. And obviously the best place to be is inside the ForexAnalytix community, so you can be having conversations with not only myself and K-Man and Ryan, but so many other talented traders in there talking about the markets and what we think is going to happen. So I want to share with you guys, like, one setup that I think is worth noting. I mentioned it in the chat room today, so like I'm going to give you guys a little bit of a freebie here. This is a gold chart, right? And what you guys will see is we have a bit of a head and shoulder developing. Now we're in a very bullish trend, and the reason why I want to talk about this is because I think as I'm very much a precious metals bull, there's no reason not to be. I mean, gold continues to grind higher. There are buyers that they're just stepping in. No one's selling, even though we're at channel resistance. Silver still looks pretty damn good, even though we're getting close to the breakout point, which is going to be at 3250 channel supports down here. But you look at it, you go look at a pattern like this, and I think we've all agreed. And Dale, we had this conversation a bunch of times here. Give me a reason to be a gold bear. I don't have one. I can't even argue that. I don't even have that argument. And that's usually when things become really dangerous, right? When you can't even argue the other side, other than there's too many buyers. You know what I mean?
The dollar and yields.
Yeah, I mean, and you're like, well, but at the same time, we've seen the dollar rip, we've seen yields rip, and gold's ripped at the same time, which is not what you would normally expect.
They don't always connect right away, and I'm talking about a leg towards 109, which is a pretty big leg from 102. I don't think gold will be immune to it. I think it's marking a top here for a pullback to 2450.
Well, let's talk like intraday, and let's just think about what might happen over the course of the next couple of days. When you're looking at this, let's imagine gold just breaks this 2690 level. That was a breakout point. Let the stops get flushed. If you want to buy this, I'm gonna take it from like, hey, we're in a strong uptrend, so I just want to buy dips. Let this head and shoulder pattern try to play out. Like let's say the durable goods orders today, here in about 10 minutes, let's say they're strong, and gold actually breaks, and let it break down a little bit. Let it clear out some stops, and see if you can find a level to be on the long side. Maybe some trend line up here, maybe some fib retracement. But I love the idea of stopping people out getting people, just, out of the market, and then a bit of a reversal.
Well, you asked
So
me what I thought the catalyst would be, so I gave it to you.
what's that, Dale?
You asked me what I thought the catalyst would be for lower gold, the narrative, and
Yeah.
that's it. 109 Dixie. That's my
Well,
narrative. That's
yeah,
my
and
narrative.
and and could that happen? Yeah, especially, post election. I'm just talking like here over the course of the next couple of days,
Oh,
like,
okay.
you think about right now, it's like, oh, I don't want to sell gold right now. I mean, you got, all these risks, and in the markets, and gold's the safe haven trade, and it's an inflation hedge, and the deficits blowing out, whatever your arguments are. But yeah, I mean, if the dollar really rallied, I mean, that could be the catalyst that drives, gold down to, 2,500 or something, post election, that might be it. But anyway, I'm just talking like over the course of the next couple of days, maybe some
Yeah.
some sort of reversal here. One of the other things that I wanted to talk about is, we do have Canadian retail sales, and this dollar CAD, it's a shame, following the Bank of Canada, we didn't get much movement. I was hoping we'd get a little bit more movement, but obviously the Canadian retail sales is going to be, something that could drive the market a little bit higher today, especially on, a weak Canadian data. Obviously, the Bank of Canada is seeing something that, they're seeing some weakness because they cut rates by 50 basis points, and it looks like they're going to continue to cut rates, at a pretty consistent clip lower. So, if there's retail sales come in, weak, that dollar CAD could, make a move for 139. And the 88% retracement is up here, but we are in an ascending wedge. And I think it's worth noting that we do have, some pretty important data coming out today. And also on top of that, we have durable goods orders that are coming out. K-Man, I want to go back and reference your chart here, where let me get over to your chart that you had up about, the euro guide, if you will. How you feeling about the euro at current levels? Because it seems like we are starting to stabilize around the 108 level. We have a lot of in the dollar.
Yeah. And you see there, it's not the Bible, this thing, by any means, but you see when the differentials close a bit, your euro dollar is going up a little bit as well. It's just running together. What I think about euro here, I think we can, if the consolidation, book management on the front runners of the Trump trade, is perhaps need a bit more of it. So I do think we could go up into the high 108s on this round, but then is it there's going to be needing for either much better numbers out of the European Union, or something with the dollar to pull it materially higher. That's still where I'm at now. I'm still not a huge euro bull, but I can see a bit more consolidation of the move that we've seen.
Yeah, yeah, and looking at the euro, and I think you were talking about it too, Dale. I mean, we first of all, we actually took out a descending trend line. If you think about like this entire move lower, and you can see right here in my drawings that the 24% retracement comes in around 108.70, 38% retracement would come in around 109.35. I mean, so or excuse me, it's 20, yeah, that is correct. This is the wrong number here. That's not the wrong number, it's just a fib from a different direction. There's your 24% retracement, this is your 38% retracement. I mean, that's ahead of the election. I have a hard time believing there's going to be too much dollar selling ahead of the election.
Yeah.
But
no, I agree, and we also have to look on the other side that we held pretty decent support. So this is perhaps what I'm thinking is that we are going to be a bit rangy for a while in the euro dollar, not outright, not fresh lows necessarily, but tough to rally above 109, 109 and a quarter if we get there.
And yeah, 109. I mean, that to me would be a pretty big stretch. But it's possible,
Oh
especially
yeah.
you're gonna get people squaring their books
Mm.
ahead of the election. Here's the other thing I want to point out, and we're gonna get ready for durable goods orders. This is the dollar max. And we've talked a lot about the volatility following. But I'm going to go back to this chart. This is the election odds that we're seeing on, after the betting markets, and this is real clear politics. You guys can see that. It's not, a chart that I made. It's just, what the market's looking at. Trump 60%, basically Harris 40%. Okay. At one point, be ahead of the election, do traders start to get nervous? I think you got to be watching the dollar max, because there's a good chance that we could start trying to probe this resistance. Because if shorts get nervous, they're gonna close out and say, you know what, I just don't want any Mexican peso exposure ahead of the election. And then I think you should be watching Bitcoin, because if Bitcoin starts to challenge that 70,000 level, then we should know that the market's probably starting to think, wait a second, this is a really strong possibility that Trump might be, taking this whole thing. So watch Bitcoin around 70,000. If you start to see that being taken, then you might get some knock-on effects in the FX market as people get ready for the next couple of weeks. Hey, Phil asked about, do people pay attention to the Canadian retail sales? It's so data. Are the data so old? Well, I think it could reaffirm why the Bank of Canada is so dovish. And I think that they're obviously trying to help the reoccurring mortgages, the cycling of the mortgage rates, and helping the household incomes. And so it's going to be interesting to see if the retail sales really confirm what they were thinking. So I think it would be a surprise if we saw a stronger number. We have durable goods orders coming up. I'm going to get ready for that. But Dale, what are your best ideas out there? And then K-Man, let's hear from you. But Dale, first off, what are you thinking for today?
For today, I'm still short the dollar, looking for a pullback, taking heat, and still short some yen.
Okay,
And I
so
also
you're
taking a flyer on WTI, risking $1.50. Just intuition I have that Israel may retaliate this weekend.
okay. So
It's a lot of
you are trading geopolitics right now in crude. And you said yen. Are you short dollar yen, or because you said
short,
short yen? So
short, yeah,
short dollar yen. Okay, got
yes,
it.
yeah, yeah.
Um uh and K-Man, what are you
Yeah.
thinking for today?
Today I'm looking to see if the Kiwi can get a little lower, because then I might I am, but just tiny casino chip, I bought some, but I'd love to see it a bit lower to try and catch a knife. For the rest, and just coming quickly back on your Canadian dollar there, it does seem like this Canadian market is reacting with a lot of delay, and actually doing the opposite of what the data or central banks are telling us. But then the day after, it all of a sudden comes back into the direction, and that is something that I've noticed over the past 2 weeks or so. And the Canadian dollar is doing it all the time, trading against what is obvious, and then
Yes,
comes to roar back.
it does it all the time, and I referenced that in a lot of videos this week,
Mm.
because it did it on the retail, or it did it on the interest rate decision, the CPI. It fights it all the way, and that's a characteristic I've realized about the Canadian dollar for so many years. Like literally for over 10 years, and we've talked about it for years on these broadcasts. It's like if you get into a Canadian trade and you think that it's because the data is going in your direction, you can't not just leave that trade. You can't just like
Mm.
call it a day and move your stops to break even. It's a good chance you're going to get stopped out. It tends to fight the data. So I've always noticed that about the Canadian. Like had many discussions about that over the years. But hey, so let's here comes the data. Canadian retail
It's
sales were
weaker
weak.
on the retail sales. The core especially
Look at
are a bit
durable goods
weaker.
orders strong.
Yeah, but durable goods.
Yeah, not and zero reaction.
Yeah, not your major data point, the durable goods these days, unless they come out extremely far from expectations.
And the data, and so it just again, this is weak retail sales. You see in the dollar Canadian tick up. I wouldn't be surprised because you're going to get people like trade it and say, "Oh, I'm getting long dollar CAD as a result." And then next thing you know, the dollar CAD's trading at 138.20 in like 30 minutes because everybody's like doesn't get paid for that. So watch the dollar CAD. It probably will come right back down. We do have University of Michigan consumer sentiment later today, and that's probably the data that if you really think that there's something that might move the market, inflation expectations are going to be it, and that comes out in about an hour and a half, I think, or so.
Yeah.
Yeah, something like
It's
that.
a final one, I think. Yeah?
Yeah, it is. No, is it
Is
final
it
or is it
not?
the revised? Maybe it's revised to final. Yeah. Well, anyway, keep an eye on that. Hey, I'm gonna say this really quick. And Dale, I know you have an interview. Is Larry here?
Yes.
Yeah.
Larry is such a good guy. Larry, hold on for 1 second. Thank you for joining us here on Face. And you guys make sure you stick around for Larry, especially he's got some great individual, stock names that he follows. He follows a lot of the indexes, really good looks in the markets. But I'm gonna say this. We are we were less than a week and a half away from the elections. And we have a few more days before we hit Halloween for those of you that celebrate in the end of the month. This is going to be high volatility time. There's going to be more volatility coming at you than you're going to even know what to do with coming in the next, like literally in the next 2-3 weeks. It's going to be explosive and there's going to be a lot of money to be made, but you have to be really careful, trading the markets in these types of situations as well. But it's the perfect environment if you guys want to take advantage of like the trader funding program, because you have to pass an assessment. You have to make 10%. You can't lose more than 6% on a trailing basis. You have unlimited amount of time. But if you want to learn how to access larger amounts of capital and not put your own money at risk, you want volatility to pass an assessment. So if you want to try to access larger amounts of capital, this is the time to do it. And over the course of the next 4 days, 4 business days, is we're going to be offering 20% off your assessment fees. And then that's it. So if you want to take advantage of that, and then you're inside the ForexAnalytix community for a period of time throughout the elections, so you have, you can talk to me, you can talk to K-Man, Ryan. We're all in there just discussing the markets all day long. So this is an opportunity for you, and it's going to go away. But these are the opportunities that we as traders live for. So make sure you take advantage of it. Happy Friday, everybody. I'm going to be filming the week ahead video here in the next couple hours, so be on the lookout for that over the weekend. K-Man, thanks for holding down the fort today. Ryan, I think, traveled into the city, didn't he?
Yep.
Yeah, he's having lunch with Michael Brown, which of Pepperstone, which he does
They're
the
drinking
trade-off show.
lunch today.
Oh, I bet he's drinking.
Drinking lunch.
And not only over lunch.
Yeah, right. So anyway, I hope you guys have a great, wonderful weekend. I'll see you on the week ahead video. And for those of you that are ForexAnalytix traders, I'll see you guys on the morning edge in about 45 minutes.
Okay, and guys, I'm bringing in a special guest. People have been talking about real
Yes.
estate debacle for a long time and have been,
Yes.
wrong. And I'm bringing in someone that's going to, give you some insights on what you want to do, because your home, for most people, it's your most valuable asset. So
Right here.
we'll have Melody Wright with us on Tuesday.
Woohoo!
I'm working her into the rotation. She's very well spoken, and I believe what she has to say. So maybe you need to hear it, and that'll be Tuesday.
She's amazing. I'm so excited for that interview. But I'm
Yeah,
equally
great.
as excited for Larry being here today. So you
Oh
guys,
gosh, I
enjoy.
forgot it, Larry. I forgot about you.
Dale, I fell asleep.
Yeah, no, you're ready to go. You're an hour away. Larry, welcome back. And like Blake said, I love your style. It's simple to follow, and I'm guessing that you're pretty long the market here going into the election.
Yes. Yeah.
Yeah.
I'm long. I've got a few ideas to share with you.
Okay, cool. Great. Share the screen.
All right. We will fire up the screen. So let's go here. And okay, so can you see my screen? It's the S&P 500 chart.
Yeah, I see the spy right
Okay.
here.
So if you want, I'll let you get started and I'll just follow your lead.
Okay. So what are you thinking here? 6,000 in the spider
Yeah.
before it?
Yeah.
Yeah.
I think by the end of the year, 6,000, maybe 6,100. I do agree with Blake that the next 2 weeks, I think, can be really, really volatile. There's a lot. Obviously, the election is going to create, I think, a lot of volatility in the near term
Yeah.
because what's that, 11 days from now? But also, the S&P 500 earnings, you've got 34% of the S&P 500 reports earnings next week. So Apple, Microsoft, some really
Wow.
big names. So
Yeah.
you've got in a back-to-back 2-week period, you've got most of the S&P 500, the biggest week for earnings, and you've got the election after that. So I think for the next 2 weeks, we really need to have our seatbelts on.
Okay. Are you in the camp that the market's going to celebrate what kind of victory, Trump victory? That part of we're already seeing Trump trades being put on, like the short side of treasuries. Even heard very convicted bond bulls for a while saying that if there's a red wave, they're out of their long bonds. I think it was Rosenberg. Yeah, it was Rosenberg.
It's tough to say. I think that the market, whatever the outcome is, whenever we get a final decision, and we don't know that we're going to get a final decision, on election day or the day after election day. If
Or
you remember the
or
year,
inauguration day.
yeah, you remember the year 2000
Yeah.
when they had to count. It went on for, I don't know, a week or two. I can't remember, but I think what my expectation is that the market probably sees a lot of volatility into the election, and that could be all markets, the bonds, the dollar,
Yeah.
stocks. But
Everything.
I think once there's a resolution, however it gets resolved, whoever wins, I think once there's a resolution, then you'll see a move back up, only because markets don't really like uncertainty and they do like resolution. So I think going in, we're going to get a lot of volatility, but I think once there's a final answer and we can finally say, okay, somebody won, whoever that is, then I think the markets can say, okay, here's what the table looks like, and here's how we're going to position. So I do think that once you get a final answer on who the winner is, then I think the markets start to move back higher.
Okay. And so what if we don't have that answer for a few months?
So
Couldn't
I
there be
mean,
a lot
if you
of
don't have it,
damage? Isn't that a lot of uncertainty that piles upon itself and magnifies itself the longer it drags out?
yeah, I just think it keeps volatility higher. I don't
Well, what do you
necessarily
mean by volatility? People say that volatility.
big
Do you mean
big big
d-
ranges outside of the norm.
okay? All
You
right,
know, you
on
know,
both
higher so
sides.
on both sides. It could be up or
Okay.
down. It could be sector rotation. Based on who
Yeah.
wins the election, there
Yeah.
are certain sectors that are expected to perform better. I know that the expectation in the market is if from what I've read, if Trump wins, then the market's expecting bond yields to go higher. But the question
Right.
is, bond yields are already up 60 basis points off the lows.
Yeah.
So, just like with this Fed rate cut, sometimes the markets, they price in what they think, and they don't always do what, like the Fed cut rates. A lot of people thought bond yields were going to go lower, and they've gone up by 60 basis points. So I just think you get some chop. I can't see
Have
the
you ever seen
future.
that before, Larry? Because I've seen the beginning of easing cycles, a few of them in my time, and I've never, I could have seen it being sell the rumor, buy the fact, and had a little bit of a bounce, a 10-year back to 4 or so. But up here at 425 was more than I thought we'd
It's
see.
Dale, it's more than I thought too. I went in and I expected that bond yields would start to move lower, because if you just look at the TLT chart, when they were raising rates, bonds were going down. So now that they're cutting rates, the opposite would be for bonds to go up. But what I think happened, so I was wrong. I expected, bond yields to move lower. But what I think happened is the market looked at this 50 basis point rate cut and said that that's going to be very stimulative for the economy. It could create some inflation. But then China came in right afterwards. China came in with their bazooka, and they announced all this stimulus, and their stimulus could be inflationary. So you get higher bond yields. And then the government, the government is spending money hand over fist right now. So, there's a lot of things that actually lead to higher bond yields. So, I'm not an expert on bond yields, but I think there's a couple things that could keep a floor in bond yields unless the jobs market falls off a cliff. And we don't see that right now.
Okay, what sectors are you favoring going into the
So
election?
just basically, so stocks, I'm long stocks and into the end of the year. So S&P 500, triple Q, big breakouts, and there could be some, like we said, there's probably going to be some volatility. I always expect a pullback around this election, but I think the pullbacks will be viable. My favorite sectors, number one is technology. So technology hasn't been the leader this year. Real estate's been very strong. Utilities have been very strong. But the chart's still in a long-term uptrend. If you look at the weekly chart, it's just a really nice longer-term uptrend. But I still think that where you're going to get strong earnings growth is from tech. We got a really good earnings report from Taiwan Semiconductor a few weeks ago. Looks like it was last week. Really good earnings report from them.
Nvidia's at new highs.
Yeah, this is a great chart. The Taiwan Semi chart is a great chart. Nvidia, everybody's favorite stock to either own or talk about. It's a great chart. If you look at the chart, it consolidated for about 4 or 5 months, and now it's just started to drift higher. It's got a lot of rising moving averages. The weekly chart set up nicely. It's breaking out. So tech for me is still a core sector. I really like Palantir, which is big in AI for defense. They've got a lot of government contracts. But outside of tech, I think the industrial sector is a place to be. A little bit of a pullback right now. That's fine. But I think that the industrials benefit from a couple things. They should benefit from rate cuts, because rate cuts should help to stimulate the economy. So industrials should benefit from that. There's a lot of strong stocks like these aerospace and defense stocks. Raytheon's been acting well, General Dynamics. But I think aerospace and defense in the world that we live in right now, I think that's a very good sector theme to be involved with. The banks look good, and I like the big banks. So JP Morgan, Goldman Sachs, stocks like that. And also one of your markets, I like gold. I've got a good size long position. I've got some gold miners. And I think that the precious metals, gold, silver, and the miners, I think that those work higher if we get lower interest rates. I think they also work higher from all this massive government spending that's going on really all over the world. You know, wars cause governments to print a lot of money. But there's a lot of things that I like. What I don't like bonds. And that's probably it for right now.
Okay. Yeah, I like gold around that red moving average. What is it? Is that a 200 day?
Yeah, the red one is the 50.
50? Okay.
Yeah.
Interesting. Okay, and well, you're showing commodities there.
Yeah. So, I heard, like everybody the other day, I heard Paul Tudor Jones, on TV talking about
Yeah,
commodities, and he's looking
yeah,
for inflation. When I look, I like gold, I like silver, I like the miners. These are very nice breakout uptrends, and they could pull back a little bit. Anything could pull back over the next week or two. But I think that these are the strongest charts that I've seen as far as commodities. The rest of the group, like energy, it's just there's no good look for crude oil. So I'm not a crude oil expert, but it's just not a good chart for me whatsoever. I think crude oil is a great trading market. So if you can buy it at the lower end of the range and sell it when it rips higher, but I look more for trends and established longer term trends that I can get into and build some big positions. So really it's stocks, the S&P, triple Q, gold. Those are some of the
How
places that I
about you,
like the best.
UP, Larry? You have a view on the dollar?
Yeah, I really don't. I know it's had a pretty strong move recently, but I don't follow it enough to really have a strong view. It's had a really big bounce here
Yeah,
right after the Fed cut rates. It's had a
yeah.
really strong bounce, but I just don't follow it enough to have a bigger picture view.
Okay. All right. And so I think we've covered a lot. How about how are utilities acting in
You
this environment?
Utilities are strong. Utilities are surprisingly strong. And if we look at the sector, it's up 28% year to date. And I think where the real winners are in utilities is the hot sector, which is nuclear.
Yeah,
So all of these AI data centers that are being built,
right.
they use a tremendous amount of power. So these nuclear stocks, Vistra Corporation, it's up 228% year to date, just a monster move. But these companies like Constellation, they own 3 Mile Island. So Microsoft signed a long-term deal with Constellation to get nuclear power from them. And that starts, I think, in 2028. So they've got to fire up 3 Mile Island. But there's a lot of these stocks, these independent power producers like NRG Energy, really strong uptrend. And then you've got GE Vernova, which is in that nuclear food chain as well. So
Wow.
utilities are strong, but where the biggest moves are these nuclear stocks. But even some of
Yeah.
the sleepy names like stocks like
CCJ. Yeah,
Southern
all
Company.
yeah,
Which one
nice.
did you say?
Cameco is like the best of breed of
Oh
the
yeah, yeah.
miners.
Big in uranium because you can't uranium is the building block for nuclear. So yeah, strong uptrend. That whole group, a lot of volatility. These
Yeah,
nuclear stocks and these uranium stocks, they can, I've been in them before and I've seen them go, down 5 or 10% in a
yeah,
short period of time. So strong group. You just have to be prepared for a lot of volatility there.
yeah. You have to have your suit on, your
Yeah.
radioactive suit. Uh, how about, I'm looking at long-term, like monthly natural gas charts, and to me, it reminds me of a lot of things that just went quiet and sideways for a long time that are building huge bases and it's trying to come out of here. Is there any natural gas stocks that look interesting to you? That natural gas stock right there, chart looks pretty good, doesn't it?
Yeah, natural gas, $2 is a really big support level for natural
Yeah.
gas. And where is it now? 297. So
Yeah, it's just
yeah,
trying to break out over $3,
oh yeah.
so
Yeah,
yeah,
natural gas could absolutely have a big breakout move to the upside. So
yeah,
over $2, I definitely think you're much closer to the lows than you are to the highs.
yeah.
So I follow the bigger stocks. So Williams Company, WMB, they're
Okay.
big in natural gas, just a really strong
Yeah,
longer
he's
term uptrend.
broke out a long
That's
time ago.
what's
Yeah.
that?
Broke out a long time ago.
Yeah, this broke out well ahead of natural gas. So this is really the biggest one that I follow. I know that there's some smaller stocks like Range Resources, but it's really not a good chart right now. And then
Right.
Southwestern Energy, I thought I knew the symbol for Southwestern Energy, but it looks like I don't. But
Okay.
WMB, because I tend to follow the large caps more, that's really my sweet spot, anything over $10 billion. And, WMB would be the stock that I like there.
You ever trade royalty trusts when it comes to a commodity? They don't have the production risks. Most of them don't have debt, and they're just, it's more of a pure play with a dividend yield on a
Is
commodity play.
Prudhoe Bay one of those?
I'm not sure, but I'm at because a friend of mine who's very good is, they're very cheap from where they were. They lost 75% of their value. That looks like it could be. Yeah, that's a
Yeah.
royalty trust.
Yeah, I've
I'm
got to tell you, I don't know really enough
look
about
at
them to
that.
say.
Look at that. 114.
Yeah,
So you have
yeah,
to know, you really have to do due diligence on each one of them, but
you really
as you
do.
can see, they're very depressed.
Yeah, you've really got to dig in and
Little
find out what
double
the
bottom
underlying
there.
assets are and all that. So I don't know it too well.
I have to go and buy some Prudhoe Bay royalty trust right now, Larry. Oh, I still have time till the market opens.
Yeah, it's listen,
Anyway,
it's
yeah,
definitely you can't say it's not cheap, right?
yeah. Well, it's like an option, for a
Yeah,
buck 14. You know.
yeah.
Anyway, uh, anything you want to wrap it with going into the election? You want to tell people which way they should go when they're in the booth?
Yeah, I mean, what the way that I'm positioned right now, and that's really the best thing, that I can say is what I'm doing is I'm long stocks, I'm long
Yeah,
gold.
yeah,
I like the sectors that we talked about, but I've got about 10% cash, and that's pretty high for me right now. And the only thing is because no matter how good, these charts look, it's like Blake
yeah.
said before, you just really need to expect over the next 10 or 14 days. You just need to expect some big volatility. Now, listen, I could be wrong. Maybe the markets just hum right along, but between earnings and between the election, what I would say is, what I'm doing is I'm sitting on some cash, 10%, not a lot, but it's enough. And I haven't been really aggressive as far as any new stock buys recently. And I'm just going to
You're
wait. And
you're
I
managing
think,
your book until
yeah,
after.
yeah.
Yeah.
What I'm trying to do right now, there's some periods of time when you want to go in and you want to stand on the gas pedal and, get as aggressive as you can. And then I think there's some periods of time where realistically the next 2 weeks, I'm just trying to get through the next 2 weeks, hope that I don't get stopped out of anything. Or if I do, I generally don't take big stops. So I'm not worried about that. But I think you can be patient for the next 2 weeks, look at your charts, have a pretty strong watch list, but I'm not in a hurry to take any big risk over the next 2 weeks.
Okay, there you just heard a pro speaking about knowing it's a one mistake business and not wanting to make it and maybe that's because he has earlier in his career. So, we all learn from the pain.
Yeah.
And right, Larry? So, I mean, embrace that failure and don't let it happen again. So
Dale,
don't,
I've been trading actively for 26 years, and I've lost money in a variety of assorted ways. So after you do that, you say, okay, I put my hand on the hot burner 5 times, never worked.
yeah.
So, there's a time to be a hero and there's a time to not be a hero. And I think the next 2 weeks is not the time to try to be a hero. And then once things clear up, we get past earnings and we see what this election looks like, then I think there's really good opportunities over the last 6 weeks of the year.
All right. So, Larry Tentarelli, prudence over valor, because, sometimes a valiant knight gets knocked off his horse. So, prudence over the next couple weeks. Overall, a very constructive view on the markets, and take it easy and have your list of things you'd like to buy if they sold off, and no one's forcing you to trade, right, Larry? I mean, no one's got a gun to your head.
Listen, there's 52 weeks of the year that we can make money. So if
Yeah.
I've got to sit tight for 1 or 2, that's fine with me.
Okay. So, also it's good to, you know, kind of not be attached to positions once in a while, to have a clear view. Because once you're in something, I don't care how disciplined you say you are, you have an attachment to it. Okay. So, lighten up, reduce margin. Larry, you guarantee it, the markets will be here after the election, right?
Oh, absolutely. And
Oh,
the best, I think one of the best things that you said, Dale, is anytime I have a position that's not working for me, or if I feel uncomfortable, my stock market mentor told me, he said, if you think you've got too much money at risk, you do.
yeah,
So there's
yeah,
nothing
right.
wrong with, taking a little bit off the table, or if you want to buy something, or if you want to make a trade, maybe you take a smaller position
Yeah,
instead of going all the way in. Maybe you take a half of a position and then you wait till you see how things work out. What I want to do is I want to make the volatility work for me, right? And
yeah.
and not have it work against me. So if you've got a little bit of cash and if you've got a little bit of patience, and if we get some volatility and you get some pullbacks, then you can take some ideas a little bit cheaper.
I have more cash and less patience at my age.
Yeah.
Anyway, buddy, really great talking to you, catching up. We'll be looking at, see what kind of world we'll be seeing when you and I talk in January, Larry. And this is where you could find Larry.
Yeah.
And
Twitter.
we'll
So
put it
the
up.
best place to find me is on Twitter, or I guess we call it X these
Yes,
days, but
yes.
at Blue Chip Daily. I'm there. I'm posting every day. Then my website is bluechipdaily.com. And you can see a lot of information about what I do.
I saw you had a 30-day trial up there. Is that still going?
I do. Yep. 30-day free trial, no obligation. I send out my trade alerts anytime I make a buy or sell. And then I share, commentary with my members every day, a lot like what you and I are talking about, but it's a lot more,
Yeah,
stock specific in real time.
yeah. Okay, so thanks for keeping all the good stuff away from me, man. I guess I'll have to subscribe.
Now I brought you a lot of the good stuff.
All right, no, I'm
I
just
brought
kidding
you
you,
a
bro.
great appetizer. I just didn't bring you the full course yet.
All right, I'm still hungry though. So if you're still hungry after seeing this interview with Larry, you know where to find him, and he'll even let you check him out for a month.
There you
That's
go.
pretty cool. That's, right in time for the holidays. So thank you, Larry, my trading warrior brother. Good hunting, buddy.
Dale, you too, my friend. It's that time of year. We probably won't circle back up until after the holidays. So I
Yeah,
hope that you have a great holiday season, my friend.
okay. And may, just the dollars just overtake you and your subscribers going into year end. Big
Thank you.
money. All right, buddy. Larry Tentarelli, everyone, and follow him. Check him out. He's made a nice offer. You know, when someone makes an offer, you didn't ask for it. I did. Go check it out. All right, Barry. Thank you, Larry. Everyone's thanking you. All right. See you guys tomorrow. Oh, no, today's Friday. Oh, boy, what a week. Okay. Don't just count your pips, count your blessings. Have a great weekend, everyone. Thank you. See you on Monday.